Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome, and thank you for tuning in to my 2,875th edition of Short-Term Trading Live with Oscar Carboni. Hey, we've got some great charts. We got some great action. It's the beginning of the week. Let's get moving. We know trading is risky, right? If not, boy, you should know this. Put your stops in. Put them in first. They're called protective stops, either buy or sell stops. Put them in first before you ever enter into a position. So, for trading on March 4th, which is a Tuesday, 2025, we've got a bunch of stuff on the board. First thing is first, the Omni has flipped and it is now a seller of rallies for trading on Tuesday. In last night's video, I showed you a chart with repetitive cycles. I said this is a chart that we found. It's got a 12 to 13 week repetitive cycle. There is no way of us knowing if that cycle will work until Friday, traders. Each bar that you saw on that chart is a full week. So we need every day that the market's going to trade, it's just going to create one bar only. So if you've never seen the S&P go down a little and turn around and go up by the end of the week, you've never traded the S&P before, right? So do not count out that repetitive cycle. It's a week chart. We need to find out at the end of the week if that cycle wants to continue. Keep that in mind. You're only getting one bar out of that chart this week. That bar will let us know if the market does want to continue higher. For short-term trading, which is what we do, we take the daily signals Monday, Tuesday, Wednesday, Thursday, Friday. It could be up, down, up, down, up. We don't care. We just take the Omni trading signals. The Omni has been killing it. Month of January, we made over 10 grand taking the Omni trading Rex. In Feb, we made over 19,000 taking the Omni Rex, and that's taking them with one lot only. And we're already up this month. Thank you, God. Thank you, God. Keep it up. So far, so good. I know he doesn't help when it comes to trading, but I thanked him anyway. We're doing great with the Omni. Now, Omni is absolutely bearish. It wants to sell the rallies for trading on Tuesday. The charts will illustrate why. That does not count out the repetitive cycle. That we'll know by Friday. Longer term charts still are quite stable. You'll see that in the chart segment. And then Omni Camp, just 3 weeks away, traders. Here in Las Vegas, the last few Omni Camps have been away. I've been across the country and out across the pond, out of the country. This Omni Camp is here in Las Vegas. It's only 3 weeks away. It is a live seminar that lasts for 4 days here in my home office, and only a few of you are invited. Please go to omnibootcamp.com because the date is March 20th through the 25th this March, and it's like March 3rd, March 4th if you're watching this video on Tuesday. We've got preparations to make. You've got to fill out those applications at omnibootcamp.com if you want to join me and learn the Omni, Oscar's Market Navigational Indicator. If you want to learn the Omni, if you want to study with me, go to Omni Bootcamp right now. This is your chance. Fill out those applications because once we get too close to the date, I can no longer accept a new student. Fill out those applications today and get back to me. So, repetitive charts, repetitive cycle on the weekly chart. We're going to find out on the weekly chart if that cycle works by Friday, so do not count it out. Yes, we're selling rallies for trading on Tuesday, E-mini S&P, NASDAQ, Russell. Longer term charts for E-mini, NASDAQ, S&P, Russell look fantastic compared to the daily charts. And don't forget about OmniCamp because I promise you, you will enjoy it if you come here. Plus, the trading Rex are killing it. If you haven't joined, I don't know what you're waiting for. I can lead you horses to water, kids, but I cannot make you drink from the well. You know what I'm saying? It is happening right now. I send these Rex out to people all day and night, and the Omni's killing it. So make sure you're part of that. So we're about to go look at a chart segment, but what I would like for you to know is if you're thinking about coming out to OmniCamp, before you decide yes or no, take a look at what this student had to say. He was just at camp. See what this student thinks.
What surprises me the most is that I've gone through a training before, and the difference between what I've had in the past training as a stock trader And what I got from OmniCamp is that Oscar is not withholding information from us. There are some traders that will train you and say, I don't want to give you all this information. I don't want you to be better than myself. It is not the case with Oscar. He's giving you everything and telling you, I want you to be better. If you can be better than me, that is good. I want to give you the information.
So you've seen that? Bravo, he's doing really well already. Just about any Omni camper who's ever come out here calls me to say, Oscar, love you to death, love what you've done for me. That will happen for you too. Now, let's go look at some charts so we can see what's going to happen to you in the markets tomorrow. But before we look at those charts, remind yourselves, say this to yourselves over and over again. Remind yourself not to panic. Put your stops in. Then say this over and over and see if it helps you, especially when you're in a bad trade. Are you with me? 1, 2, 3. Stops are in. Emotions are rock and roll traders. I hope you're listening to that now. Let's go look at some charts. Traders, remember that repetitive pattern from last night's video? 12 bars and then it changes complexion. 13 bars changes complexion. 13 bars changes complexion. 12 bars changes complexion. Here, 13 bars, we expect it to start to change the complexion and head back up. Now, that is a weekly chart, and this is, we don't know what it will do until the final bar gets put in this week. Then we can see if the pattern is continuing. So let's get rid of that for now because that's Friday's thought. We are up close day traders, right? We're in the trenches on the front line, day trading. For day trading on Tuesday, Russell 2000 looks absolutely terrible. It is below the 200 ball moving average. It is now below the head and shoulders formation, so that absolutely worked out, and we sit there right now. Russell 2000 below the 200 ball moving average with a red Omni for trading on Tuesday. The leader, the Dow Jones Transportation Average, is now below the 200 ball moving average and below the head and shoulders. So that's working out. You've got NASDAQ, which as of Monday's close has joined the party and is now below the 200 ball moving average. So that leaves us with the S&P. And where is it? At the 200 ball moving average. It probably will drop lower because everything else I just showed you did, right? And they all sort of run together in unison. So the likelihood is sell the rallies for trading on Tuesday because you're going through that 200 ball moving average in the ES as NASDAQ did, and the Dow and the transportation average and the Russell. Now we're going to change just a little bit. You saw that short term looks a little bit scary for trading on Tuesday. Yes, markets look like they want to go down. But now let's step out a little. The Bloomberg Commodity Index, which is the measurement of commodity inflation, or in our case, deflation. It was at 140.55 at the height of inflation during the COVID, where we could not get our supply chain ramped up. 145. It's trading at 102.75, 103 right now. Looks like this, coming down from a double top. There's a reason for this. Same chart, blown up so we can see that double top. We are coming down from the double top. It's dropping nicely. This is the measure of inflation. Inflation dropping would allow the Fed to lower rates, which would help the market go up eventually. Crude oil. If you remember, the Trump trade, we're going to drop to 55 and then eventually down to 47.50 in crude oil. That was done right here, that projection. Look at how much lower we've gotten so far. It is heading down towards our projected area. And if crude is heading down, inflation is also heading down. We've got T-bonds, 30-year T-bonds. When T-bond futures go down, interest rates go up. When T-bond futures go up, interest rates go down. Now, Jerome Powell of the Fed does not have to say a word It happens inherently by the street. If the street is buying up T-bonds, that means that the yield, and I should say, what you would pay for a 30-year mortgage, let's make it simple, is heading down. That's what happens when T-bonds go up. So you've got inflation heading down, you've got crude oil heading down, which is going to really help companies and transportation and you name it, and all of us. And you've got T-bonds going up, which is making interest rates go down. These things should push the market back up soon. Now let's go look at that market from a longer term point of view. You saw all the dailies, right? You saw that they look scary for Tuesday, maybe Wednesday. But here are the weekly charts. The worst of the worst of the worst is the transportation average, which is, by the way, the one that topped out first, the one that's been acting the worst, and the chart that has dropped the most is the transportation average. That's what it looks like on a weekly. Overall, long term, it looks much more stable than anything on the dailies. And look at this average, how it seems to hold well alongside the bottom of the channel. You're getting to test it soon. No reason why it shouldn't hold there again. We'll take this one day at a time, or 1 week at a time, if you will, on this chart. Now you've got the E-mini S&P, another longer term chart. Thus far, looks fantastic. Where does it usually hold? Somewhere down here, where it is currently. So maybe that weekly cycle chart is telling us that by the end of the week, this holds and goes higher. We'll see. That's for Friday. For now, longer term doesn't look scary nor terrible. Dow Jones Industrial Average weekly bar, same thing going on here. Does not look terrible at this moment in time. Dropping through here for a few bars and staying down there would get ugly, but that's not what happened yet, right? We're still in the channel. And then you've got the NASDAQ on the weekly. Once again, not even near the channel. Look at all that space. Holds the channel whenever it gets near it and looks fantastic as far as a long-term chart would look. So no real damage to long-term charts right now. Long-term charts are quite stable. Brings us back to this. Do not count this out yet, because the market could easily spend a few down days and then go all the way back up, and all of that would be in just one weekly bar on this chart. So let's see where we end up on Friday regarding the repetitive pattern. Traders, I hope that helps. I hope these charts help. Please join me at livewithoscar.com. And if you need help trading, the Omni Platinum trading recommendations will help you dramatically. Make sure you join at livewithoscar.com.